right, well, good morning, folks. Shooter Scott Henderson. And hey, we are going to go over questions and technical analysis this morning in our town hall meeting here on July 16th, 2025. Of course, those of you who've joined me, I appreciate it. Let's jump right into this. So let's start off with a monthly SPY chart. And I just, once in a while, I like to come out. I like to get grounded, on where my thinking is. And that really is in this kind of market when I think we're getting overbought. This is how I sort of calm myself down. I just look out for the larger time frame. And, right now we're targeting the 618 off of this low, or what is it? May of 25. And note that our extension off of our March of 2020 low, we basically accelerated and we hit the 100 fib before we put it in our retrace. So I would say that we have a very strong viability to come up here and hit that 744 off of this breakdown. Now, obviously, if this is a month out there, we're talking 16 months out, probably 14, 16 months out minimum is sort of the thought. But let me drill down just a little bit deeper. And, obviously, we are testing a little bit this morning. We still haven't filled the ledge, until we break below this, 616. It really has done nothing wrong. All it's doing is building out this flag kind of thing to the upside. Now, if you look at structurally, we have peaking drive 1, peaking drive 2, and peaking drive 3. If we come down to the 4 hour and look at that, you can see the little mounds in that, boom, peaking. So we should get a back test, probably to that 616, maybe even down to 614. I don't think we'll get down. We need more of a catalyst first to get down to 611. All hell really doesn't break loose until 604.68 breaks down. That's sort of the thought. But if we look at our structure, this is peaking drive 1, peaking drive 2, peaking drive 3. So we've got this so we're extending the way that I see it, our structure a little bit, because we put more of this flat in here, which usually just means it starts over here. So it's basically telling you, hey, I'm going to extend this distance from the med length from this 4,725 low to this 523 high or higher low. So that would be my thinking. So I would see something like this. And basically what I'm seeing is 3 of these. This is 1 measurement. This is 2. I think we get a 3rd one. So, we could push way the heck up here, but it's probably going to be flatter. That's my thought. So we might get up to 634, 635, unless we break down below that 604. That's my thought. All right, let's look at the NASDAQ. Same structure. Peaking drive 1, peaking drive 2, 3, probably get a little bit of a back test. I would say that 548 holds. Really, nothing breaks down until we break below that 539.16. And right now I'm using that 538.17 as my risk anchor or my second area to hit the stop. Let me go back to the SPY and note where I would be running my anchor here. My anchor's down here on this line, but I'd run it off of this wick at 608.99. All right, let's start going through some names. All right, Tesla. I still like this. We got a little time to earnings. I did not like the way the bank started out. My first instinct was to start closing positions, but obviously I took yesterday afternoon off, and of course the market dumped, so I probably should have put on some TQQs on Monday. However, we still haven't broken down that much. I mean, we're still in that upper band or that shelf in the NASDAQ and the S&P, as well as the Russells and as well the Dow. But I'd like this to get back to maybe this fair value gap down here around 306, maybe right in the middle of the gap. And it might give me a shot, chasing back up to this 340, 345. I think, the one thing about triangles or diamonds or wedges or whatever you want to call them, they manifest 70% to the upside. So I still like Tesla. All right, let's look at Hood. So the initial anchor on Hood was that 681, and now our next anchor, we should be running a minimum of 85 here, but I would step that up to the base of the body here of 93.59 because this is not slowing down. I mean, this is an extremely euphoric trend. We might actually see 4, as far as our drives, peaking drive 1, peaking drive 2, peaking drive 3, we can see a 4, which, by the way, we don't go over that very often, but, Elliott Waves likes 3, 5s, and 8s. So usually if you're going to get more than 3 drives, you get 5. And like once a century, you see anything more than 5 drives, but almost everything is still three drive structures that we look at. All right, let's look at AMD. I really like this, even right now where we're at. The 157s are what I have a little piece on there. I only have the 25th because I just want to stick my toe in the water there a little bit. Reason I see this accelerating, I see this as a flag structure. So when I come back and I think about the pattern, what I'm seeing is this entire thing is a flag, at least visually. So I would say that we could target at 1618 or 618 at 182 easy. And this is going to track with AI. I think it's 2 months behind all of the news we're getting now on the AI data centers. So this was one of the names that I posted on Twitter about the secondary benefactors from what's going on between Washington supporting the AI infrastructure and that initiative and the billions of dollars that everybody's still to invest. I mean, really, I bet you we haven't even put a drop in the bucket yet. I bet you we spend $5 to $10 trillion on AI infrastructure by the time we get all said and done. All right, let's look at JPM. Now, we took a little trade on that. And, we closed it out for a $6 loss because it didn't do what I wanted it to do. So we're sitting there flat in 275 cash secured puts, done nothing wrong. The anchors I would be using are roughly 101.28 and 272.11. If you're going to run anchors or run stops on a cash secured put, which I usually don't, unless I just have alerts set to remind me, so I take a look at it. Now, ASML, I'm forgetting the name of the CEO, but whatever the heck he said, markets didn't like it. We are going to be sitting on shares there because they will get put to me on Friday, but that's what it is. Next. Okay, Goldman Sachs put a little piece on. We closed it out roughly at about 46% gain. If you're still in it, your anchors are 439.38 and 623.65, and it's right sitting on it right now. It's really done nothing wrong. All right, now Netflix, I just went $100 deep on this one. I wanted a piece on with it. I took the 30-day average move and just doubled it, because I thought that was a safe place. Or a conservative place to get a piece on and get paid and collect the premium and move on to the next one. However, if you're in that, you want to track your confirming trend support line, the 162.71 and the 1180.61 is what we're going to use. And then we're going to go through Taiwan Semiconductor. Now, we put on both a call and a cash secured puts. We got $5 on the call, close those out. I'm still holding the 18th 225 cash secured puts. I'm going to just let them expire worthless. I still like this for a second and a third peaking drive here. I mean, worst case scenario, we end up putting a flat here and it takes me out at 238. But even still, those cash secured puts should expire worthless next. But structurally, I want to come out to this and I want to look at the monthly on this chart because I want you to get a visual of how big this trend is, the longer term here. And realize I'm only measuring my second mound. So I'm sitting here, I'm projecting the 2618 at 348.86. So, I mean, we could get all the way up to the 361.8 or the 423.6, way the heck up there in time, if we continue to have this mass build out in AI infrastructure. All right, looking at BABA, we put a piece on there, the 815, 125 calls. Forgive me, I'm going to come down to the daily on this one because it's going to be too noisy otherwise. That's not taking me out yet. I put a quarter piece on because I wasn't quite sure about China. I don't really trust any of this Trump news. Reason is he's a flip-flopper. He likes to change his mind. So we're just going to sort of see how that plays out. Now, Galaxy, I also posted in chat. It is working. Now, I did not put a piece on in this one. I don't remember exactly why, but I remember the setup was there. And for some reason, this was on my radar for AI. Not recalling exactly why this second. So, our first target's going to be up around $28. $20 cash secured puts, you could actually go up and do 23 through $25 calls, and you're probably being conservative there. So as far as a anchor, only because we haven't gone through this, I'd give it a little more room, maybe to our wick here. So your initial anchor should be 820 and then roughly 2046, 2040, and that's how I would do it. All right, let's go ahead and jump to the July 7th week. I still like Apple here. I haven't put a position on yet. I'm trying to find a reason to get on board. If you did put a position on, your anchor is 164.52 and 202. However, that can be moved up here. I mean, if you wanted to. I was trying to keep this whole flat, my whole structure was this sort of flat that we were in, and we went out and tested it to get out. When we get out, we're going to start moving. So that 1618 at 228 is very viable here. Okay, let's look at OSCR, Oscar Health. It sort of dumps, but I like it for another entry here. So that's one reason I have it flagged. You'll note once the chart gets on my radar, I often go back and I visit it simply because it just wasn't its time yet. It doesn't invalidate what I see. And what I see is a huge broadening formation. So, I mean, the original broadening formation was here. So it overshot it. All right. And they're much more euphoric coming back. So, this is drive 1, drive 2. So this is drive 3. And what can drive 3 always do? Overshoot. So visually, I'm always thinking about, hey, why do I need to get back in here? So as long as this 14-13 holds, I see no reason why you couldn't build a position out with this. And I think it'll pay really well. Thinking that 50% back is $18 and, viable, the way that broadening formation measures, we're looking at roughly $25. All right. So now I'm going to flip over and I'm just going to go to either my blue or my green names. Now, team, again, I like this as for another shot as well. Reason is because it hasn't broken down below this low. We have clear divergence here. So whatever put comes in as a higher low here, it wasn't its time where it got rejected here. We'll have to see. I'd like a little push to the 201 fair market gap. And then when on that back test around 192, I would think would be where I would like to jump back on board. All right, Soundhound, haven't changed anything here. We're just sitting, it was a yield play. We're long 10-20 covered calls. American Express, I still like this longer term. As far as a position trade, again, this is my thesis for somebody who's got to work for a living. This is just a great stock to come in and sell, 295 to 305, cash secured puts, and rinse and repeat. Now, ONDS has really done absolutely nothing wrong. Your SEC and anchor, I would say that you can move up to your wick at 212. However, this is another one where I've got $2 covered calls sold and $3.50 covered calls sold. So it's just doing what it's supposed to do. Take me out on those and make money in the time frame. That's where we're at. All right, grab, same scenario. Anchors are now a little deeper I'm going to have to go way the heck down this one. I should have moved that tab up. We're going to do it right now so I don't have to play with it next time I look at this chart. So the lower anchor is 219 and we can move up here if you wanted to, but I'm not going to sell it. I'm going to hold it, period. I'm in at that $5, sitting on those covered calls. But I mean, realistically, if you bought common shares or did something different, you can move it up to that 480. Hyatt is starting to reject just a little bit right around that fair market value gap. I mean, right at the gap. I mean, you could take some profits here if you wanted to, obviously, if you're in it, but it has done nothing wrong. Anchor is still at 102.43 for the base of it and 146.37. And then let's jump and look at HIMS. Now, HIMS here again, doing the same thing, turning something into a yield and sitting on it until it pays. So, we've got these till August. I expect the common shares that I have, actually I have 3 lots. I expect those to get taken from me. And then the cash secured puts to expire worthless. And I'm thinking about, do I want to buy something else, like maybe around $50 cash secured puts? Because actually the range this has been in and where it just sort of sticks, it has its move and then rejects, builds out a flag or builds out a mound kind of thing, and then it's going to recover. So I would expect us to at least recover to 57, but I think it takes out the $75. I think it just keeps growing. The structure to me just looks too big. All right, Big Sky. Talk about a launch. I don't remember exactly who posted this in chat, caught my attention, and I threw it out in the room. I think we were down here around 1450, and this thing has just run. We can move up our trailing stop again to the wick. I mean, you could go to 50% of the candle but I want to see where this runs because it's still running. It's not slowing down. I mean, you can leave your stop where you are, actually. I'm seeing this as a flagpole, this from this base here. So I'm looking at this as an ABC structurally could potentially get us up to that 16180 at 35 bucks. So just trim and trail and hold. 615 is the base and 2450 would be the new stops, I would say. All right, let's look at IBIT. We ran into a little resistance after that push. So I see this, I didn't spend a lot of time on this chart for today, but I mean, at least prepping for this. So first thing I see is a flag, and I always, because that to me is just bullish. All right. Now a descending wedge, which again is bullish. So maybe we build that out here. So maybe we build out maybe something like this and then launch again. Historically, it likes to do that. It did it here, did it here, did it here. So yeah, did it here. I would say that's very viable. Back at 63 bucks is a next entry point as far as that look. All right, let's look at FDX. Now we are stopped. If you were in it, it took you out on both sides of this. So obviously we don't want to have an open position at this point. Get back down here, we'll revisit it. I still like FedEx as a recovery play in this economy just because it's too much of one of our generals as far as stock. All right, let's look at JOBY. Now this thing has just done nothing wrong. Look at this thing this morning, up another $3. I moved this yesterday, 1202, I think. 496 is your lower anchor, 1206, 1202, or 12, whatever. But I'm going to say move it up to the wick of this candle at 1443 because it's got to slow down. I'm going to go out to, what am I on, daily here? Let's look at the weekly. Yeah, we're pushing all-time highs are at 1692. I think we get up to 2150. So I like this. So if you get taken out of 50%, I'm good with that. We're confirming on RSI. This is just like a moonshot as far as I'm concerned. Not only that, I like the thesis. Kirk was, I forget the name of the stock he posted as far as drones, but this ultimately is, a type of autonomous AI kind of aviation product is what they put out. So I like that to the upside just because of the thesis. So let's come out. Let's look at SNPS. Now we are right now testing our trend support now. Done nothing wrong. All right. So your anchor here is 365.74 and 534.34. I'd leave that. You could push to the base of the flag, which is why I said you're pushing on support. I mean, you could. I want to give this a little room. Reason is I like this flag. I just like the breadth of that flag here and how clean and decisive that was. So as long as it doesn't break below this roughly 544, I see this as an ABC up again. I think I've already done this once, maybe in last week's video, but equality to me is up here like this. So I see 618 as being totally viable. That's just my thought. As far as that look. All right, let's look at Unity. Just kept going. Man, took me out on I've still got my $45 call. It took me out on my $25 calls with a really, well, now I'm going to say put it to 50% of the gap. However, when I talk about, I have I have three different buckets. I have what I call intraday trades. Then I look at swing trades, short-term, mid-term, and long-term. All right. And then position trades are different. Unity is a long-term position trade, just like AST, Space Mobile, or Rocket Lab, or even Oust, okay, as an example. The reason being is because structurally, the micro and macro of those stocks is so much bigger than just a trade. You really want to put some different rules in there. So if I get stopped out of 50% of my position on Unity, I'm going to be looking for a way to get it back on. Structurally, the way that I see this is we're in this ABC structure now, and equality puts us up here around the 618 potentially with an elongated C, all right, or an extended C, all right. Let me look at MP. Now, MP, to me, I would have taken profits yesterday. All right, so just structurally, reason is we got two gaps. All right, we wicked off of our top here. The acquisition news is going to be waning, but technically where you should put your anchors, if you're still in it, run this 1864 and then 50% of that green candle using the 5598. And that's my thought. All right, now I'm going back to my next CELH. We got stopped. If you were still in it, I'm just going to leave it there. I mean, you could hold a little piece here up to the 382, but I would suspect us to roll back down to maybe this fair market gap at 41. I've got an alert down there set, so when that goes off, I'll look back at it. All right, Cava, we got stopped on a piece of it because we were running that tight stop right up here. So you should probably have about a 50% position on. Don't add anything back until we get above this 92.80. Then the same scenario. This really is not a longer term bet for me till we get over that 101.74, just like I've said. All right, let's take a look at our VIX. Now, even with this little volatility, we're still holding the $50 cash secured puts. Those will get put to us. I'm just going to sit on them, and if I don't get a 6 weeks, I'm going to give it. I'm going to sell some covered calls on it right at 45, just to get out a couple bucks in the money, and then I'm done with it. Rinse, repeat. But with this volatility we just saw, I see no reason why we don't get a bid to get out. All right, looking at PLTR, done nothing wrong. This is another position trade view for me. You know, I'm looking at 1618 as an extension, then wherever our back test is, I get interested in chasing wave 5. So structurally, the anchors are 615 and 132.32, the lower part of the wick on the second general candle. That's just the way I view it. It's done nothing wrong structurally. You know, we're still peaking drive 1, we're building out peaking drive 2 on the larger structure, and we're going to get a peaking drive 3 up here as well. All right, let's look at ENVX. Done nothing wrong. I had so many charts I was looking at last night, I didn't get to them all, and it was after midnight, and I said, well, sorry, I'm going to bed, folks. All right, so I would use 527 and 1319. Again, this has done nothing wrong. A little difficult to measure fibs on because we're in still a lower trend channel or a downward trend channel. But we've cleared the 78.6, so above that, you know, we're now looking for a target up around that 150 fib. I would think would be the minimum on that. Once we break above this, come in here and just give you once we get above this line here and clear it, keep going. Now, once we get back above the 100 fib, you know, it's going to chase 24 bucks. Easy is the look. So let's look at Rocket Labs. Man, it's just, you know, it's true to the sense of, you know, hey, it's a rocket. I was waiting to say that. All right. So structurally, I see this ABC. And, you know, when I'm tired, you know, and I'm tired a lot because, you know, my sleep issues, but I like a quick, fast way for me to get a visual of what I'm looking at. So this is an ABC, or it's wave 1, and we're in wave 3 of an impulse. That's really how I see it. So similar structure. The difference is we're going to have an elongated 3, probably a tighter 5, maybe something to that degree. So that basically puts us at either 50 bucks or 58 bucks to the upside. It's done nothing wrong. You know, as far as my anchors, I would probably not tighten up 50% of the general, but you could. It depends on what your book looks like, what your profits are. I mean, if you're well in the money for the quarter, you know, obviously maybe give this one a little more room. Otherwise, if you're not and you're marginal, and when I say marginal, you're at about 25% gains for the year or less, I would be tightening this up and book my profit. And if I get my stops taken out, 1475 to 4245 is what I would use as far as. I also wanted to address SMCI. Now, even though ASML did not work this morning, TSM semi-worked, and Nvidia is still working, or Nvidia is still working. This name, I like a recovery here. I think it was just overly done on news, and I do think that $60 million they invested in their cooling systems for AI server racks, you know, is a nice package delivery. I don't know if anybody else is offering that specifically, but, you know, I'm going to come back and go to the RSI here. We have a confirming high here, right? So what are we always looking for? At least one more divergent higher high. That's why I like this chart. I like this chart because of this extension here. Gives us the 3618 at 205 at some point. So if this stock recovers, it's going to be a launching pad once it gets back above this 100 fib, about 76 bucks is my thought. All right, let's jump into some names. Let's look at OUST, which I do not have a position on right at the moment. I would be using I'm going to bring in a new one. The chart's too noisy. So I would be using the wick of my lower candle, roughly 25, so 670 and 25 bucks. As far as, you know, we're at target 1618. Hold on, I'm just looking at this chart as I'm talking. Peaking drive 1, 2. This is peaking drive 3. We're probably going to come back here. Probably going to roll back to about 23 bucks here. Maybe even down to 19. Just looking at my mounds structurally. Now it's going to work. 2618 is totally viable. on this back test. Matter of fact, I want to make sure I have an alert down here on this. Takes that out because we want to put a new position on there. All right, let's look at AST Space Mobile. Nice recovery. The problem when we start getting this much volatility, stops really are hard to do because it takes you out and then you turn around, you watch it coming back. And I'm very serious when I say every stock has an MO. So when you start seeing the volatility in a stock, you sort of have to rethink your positions a little bit where you can absorb that. So probably a bull call spread, in the range of buy 55s, sell 70s is probably a smart play right here on this if you don't have a position on it. But I see this as a flag right now, which we're building out. So now my thinking would be that we would probably get something like an XABC here, something to that degree. So, $43 might be a better spot to do that. And let's take a look at Asan. So, using a regular fib tool from our low of 310.25 to this 63.25, and then our floor down here at 620.25. 50% back gives us $16. However, looking at this gap structure, we took this gap right out, nice grind up, put it in a higher low. We've now got a lower high, or higher low, excuse me. That's always a tongue twister for me, which structurally, as long as this support holds, I would just draw this risk line, already have it, sorry. As long as this anchor holds, I'd go off of this wick. 13.18 and 11.63. It's worth giving it a shot here. However, if it breaks below that, I would be out because then we're probably continuing, and this is probably an ABC right here, which it could be. Looks at this. Two equal. So that's what the outcome. All right, CRM. We've broken below this 257.49. So I am clearly looking at this as an ABC structure. I like it back right here at this fair value gap. Start getting interested at 242. That would be my thought. However, I'm wrong on a break back above 262. And when I say I'm wrong is that, maybe this was an overshoot. We have some clear bullish divergence going on here. What I don't like down here is that we kind of have like a confirming low. So, those of you who've worked with me, what am I looking for? When I have a confirming low or confirming high, I'm looking for at least one more divergent lower low, which is a lower low in price and a higher low in RSI, which we are getting here. So, however, structurally, I'll say it does look bullish still when I look at that. It does. So when am I wrong is the next question I want to ask myself. Well, I'm kind of wrong at 262.95, but it hasn't changed the trend until we get back above 276.64. All right, let's look at UPS. Actually, looks pretty good right here at this fair market gap. I'd like a little lower RSI structure. However, considering FedEx is breaking down, I'm going to probably say, no, I don't like it here. Reason being is this looks more like an impulse than an ABC to me. So this is one. We're going to get two, maybe a three. So, if you want to test the waters at $96 maybe, I'd really like it back down around 94. Trend support is probably going to break down here. I'm just saying that. So we still got a minute before that triggers, but I'm going to set an alert on that because I want to know when it's going to clear that. And then where would I want to get back in here? So look at our value gap back up here around 101. Gets back above 101, you could try and test the longs. Really doesn't get serious back to the upside until we break above this 104. There's got to be a better way to click colors on this thing. Too many colors. I went back to red and green, by the way, on my bars because the purple were getting daunting, trying to figure out where it was bullish and bearish for me. So, but doesn't really start to get bullish until 104.55, and then really our confirmation of the move, and this could just be an ABC structure. This whole thing right here. So we put in an A, maybe a C like this around 110. So I get real interested down here. Down here, it makes a lot of sense. All right, looking at ARE, we've broken below the shelf. So, this flag is invalidated as far as I'm concerned. So this little thing right here. So when you have, structurally, when you're setting up a shelf, what you're looking for is your breakout candle, right? Then your back test is where you want to measure your flag. And there's a number of different ways you can do it, but that's how I do it. And then I'm structurally looking at how that flag builds up. So when I initially look at that flag, I want it to hold this range. Wicks are okay. Bodies outside of that are not. And this is where we have a body outside. So the the chances are is that we're going to come back and go to our next level down 1941 or 1923. Here again, I'm going to go back to the same phrase. So when am I wrong? Okay, well, I'm wrong when it gets back above 21.19. And then we've had a clear trend change or continuation up at that roughly, oh, I guess, no, that is the top. So we've had a clear trend continuation. Man, I should have gone out this morning and gotten them out. All right, so the clear trend change is at 21.19. All right, let's look at BMY. Actually looks decent down here. Nice flat building out, a little broad, no real decent back test down here off of this 513 low. However, it is still holding. So your stop is going to be real simple. Use your wick, your anchors, breaks below there. I mean, it's worth a shot. Cash secured puts would look pretty decent on this. I know they're paying probably at least 600 a contract, I would say. So use 44 and 46. It gets below there, I'd be out. Nice, clean divergence on this. Good eye, by the way, seeing that. Targets 61.8 minimum. It's going to be your first target. Next target will be 100. Then we find out if it's going to reject. But viable, this gap up here at 1618 is really glaring to me right here. Just because that gap fill is a great place for rejection. Not only that, there's nothing in this look. I mean, we've got a little bit of a noise here, a little bit right here, but really from this entire move down, okay, this is where your main gap back up. So if we're going to recover, that would be the case. However, let me come in and just say, this also looks like a larger ABC pattern. So you want to mind your stop on a trade like this, because if this is going to reject, it's going to go way the heck back down to 32. That's sort of my thought. All right, let's look at ACHR. Done nothing wrong here. Still targets at 1514. Nice base. Structure looks sound. Where would I put my, I'd go right to the wick of our current candle. Use this as our anchor. 161 or 162 and 1013. Now, $15 calls are still viable here. September, October, even maybe some November. Structurally, I mean, this is where it starts to break down. We get below this fair value gap, then the story changed, right? Outside of that, this is an impulse. Even though we had a flat here, this is much more euphoric, okay? We had our confirming high here in this. So this is mound 1. This is mound 2, but we got a confirming high in mound 3. So clearly it's divining that we're going to get mound 2. We're going to clearly get a mound 3. So 21 is also very viable. All right, very similar look in EOS. S energy. The only thing I don't like is that red cap. That's a little euphoric to the downside. Largest print on the tape, okay? Bearish divergence up here. Started here. Confirmed high was way down here. Second drive was here. Third drive was, this could revert to the mean here, back down to about $1. So challenging part is, if it breaks your stop, I would keep a very tight stop on this. I don't know that I would even do the wick on the red candle. I'd probably do the wick because you closed up here, right? So reason is because it starts to break down. It'll be fast. Won't give you any time. Small caps, small names, small price. Get very aggressive to the downside. So 61 cents and 459 is what I would use. All right, let's look at Zillow. Is this Zillow? Yeah, it is Zillow. All right, I haven't looked at this one in forever. All right, looking, I would go to the body of the candle on this one. If you're in it, I'm assuming you got a position on it. You just want to know whether or not you should hold it based on the look. Thinking 226 or 221, 2621. And then 69.85 from a fib extension. You got plenty of room to the upside if we just measure this leg, this mound. 618 is at $84. 100 fib is at 101. I'm even going to come out to the monthly on this one. Huge recovery here off of the lows. Broadening, not positive for the bulls. Broadening. Let me just give you a visual of what I see there. So broadening here. So you've got the second drive. This is our third drive. Drive 1, peaking drive 1, peaking drive 2. We get peaking drive 3. This thing's going to come down. So I would probably definitely be taking profits at $100 if I'm still in it at that point. AEHR. Done absolutely nothing wrong. However, it was stopped. We used the formula, and that's only because we wicked and closed off of that general that's there. This is a tough call. We got a lot of huge volume coming into this one. If you still have 50% on it, come down to the daily. And I have got a lock. I'm just going to get rid of it. It's easier to get. Yeah, except for it's a diamond. A diamond is going to, chances are, resolve to the upside. So the odds are that this flag continues, except for we have sort of peaking drive 1, peaking drive 2, peaking drive 3. No, take profit. profits. Hold 20%, 25% with a pretty tight trailing stop would be my thought. We've got resistance right here. I mean, we basically tagged it, right? We got to break above that. So I'd want to hold a piece to see if that happens. Then I might go back and get to a full position size above 1608. That's what I would say. All right. So Honda, I don't necessarily like the flat look here, up here. It's really struggling with resistance here. Let me go to a weekly. I'm just looking at RSI. Confirmed, divergent, divergent, confirming, didn't get a divergent low, confirming, no divergent low, confirming, no divergent low. Its MO is it doesn't like to give one. Most likely outcome, even though I don't like the look of that flat, so we're going to come up here and test this 39. So what I would do is I just come in and run a stop. If you're in this, I would just use the standard methodology. So you establish your anchors based on your prior low, preferably a divergent low. So use the 2159. Now, since this next candle closed below the body of this green candle, I would use the wick as my low, 28.99. Breaks below that, I'd be at 50% position size, and then I would not add it back until we close back above this 31.16. That would be my take. Now, China is going to get a bid here, I think. However, Bob is already pulling back just a little bit, so I don't really know how well that sticks. I'm sort of in the mindset where I really don't trust Trump in, he's going to make a deal. He's going to do whatever he thinks is necessary to get his deal. He doesn't care about the stock. So I want to avoid him. That's, so, but I do like Baidu, but K-Web is probably a better choice than Baidu. And the reason is because for the longest period of time, you could buy Baba, sell Baidu. They were inverse. So you could, and that to me has not changed with this look here. We get back above this 95.32, yeah, maybe. And it does have a shot at 129. I mean, it is a long shot. But when do we have confirmation that move is going to take place? Above 94. But we do have a confirming low right here on this candle and a divergent low here. So I'm going back, building the case here. It meets that criteria. We do have some volume building here versus we did not have it here. So you have your inversion in the corrective leg, which usually is indicative of a trend change. And let me just go to what I mean by an inversion. So you get this mound structure that you get the flushing drives on the A, right? Come on, God, make it quick. Own it, put it over here. And then you get these peaking drives on C. So you get this inversion. So that typically is pretty much, and I don't have a number because I haven't been able to back test it that way, but consistently it implies that we're finding a bottom. Now, whether or not we find a bottom in this time frame that we're in now, I'm going back in history, looking at the time frame. So we had 5 of 2019 through 11 of 20. So we had 15 months. So I'm going to say we're in our flat here, 8 of 24. So 15 months would be out here at what? About 10 of 25 is more likely when that base would end. And again, I'm just looking at the MO of the tape. This low also was about 15 months. This base up here was 1017 through roughly 818, so 12 months. So we have 12 to 15 months as the MO for the tape, basically. But it will measure to 129 when it does decide to get out of it. Cash secured puts at $75, $80 is the riskier side. Is probably the most that I would do. All right, BTU, nice divergence, glaring right out of the chute. So we have our confirming low, divergent low here. Full position size, give it a shot right here above this 1560. It's going to measure a little bit too. Peabody Energy, huh? I was looking at energies, but didn't look at Peabody. So target would be, at least 50% back at $25. I like it. I just like the structure. Nice. I mean, total cascading flush. The only thing we don't really have that I would really like is a decent wick, like a wick like this. See this wick right here up to that's total buyer exhaustion. This is more of seller exhaustion, right? And we don't really have that. I mean, we have that here on this hammer. We do have it a little bit in the tape. So we're digesting it, but it's not clean. That's the only thing I would like positive to this other than that. So $15 to $20 calls, I would say, yeah, definitely worth putting a piece on. Hold on a second. I want to set an alert. I don't know why it wasn't on my radar, but it needs to. Which, by the way, I like this. When we're looking at names and I find instruments that work that have, what in the heck is up with this tape? really in that much trouble. I really enjoy looking at stuff that, I haven't seen, where it's viable for a setup. I just enjoy looking at them. That's, it's a little motivating for me. I think this is an ABC to the downside still. I don't think it's a done. And I've got a guy on Twitter that I follow who's in real estate and he does new home sales. I don't remember his name, but I really would like it back here at $10, $9.50. But we're only talking $1 difference. So we're only talking a $10 difference in price. I'm just looking at my case here as I'm thinking. So we get back above that 1144, then we do got a shot for the 78.6, $13. I mean, if you want to sell some $9.50 or $10 cash secured puts, maybe, but I wouldn't be too large. Only reason is it doesn't have a lot of upside here. It just doesn't. They're going to be better builders that just are going to have more upside. That's just my thought. All right, AMTX. Well, we're same thing. We're wicking off buyer exhaustion, buyer exhaustion, buyer exhaustion, buyer exhaustion. However, we're putting in a green candle, so we're better off than we were here, but not necessarily here. Did the same thing here. So we either get back above this candle. I would be trimming below 286 and wait for a buyback around 230. That's what I would look at because the MO hasn't changed on the tape, regardless of what the micro and macro is. Until that event occurs and their production moves, this is a long-term position trade. So it's very difficult to hold a larger position here for me, depending on what my cost basis was. And hopefully none of you are upside down in that, off of this leg here. Absolutely, this was the perfect catch here. Literally was. We went from $1.60 to $8. And unfortunately, the mental game, the psychology of trading is those of you who are in that trade, you're thinking, oh yeah, this thing's going back to $8. Well, until the tape tells you otherwise, it's not necessarily yet. It may do it next month or a quarter from now, but today, no, it's not going there. We need more volume coming in than this volume candle here. Notice the candle that it took us up here. It was the prior candle that gave us the push. So we need to get back up here to this breadth up here as far as candle distance on a weekly. Let me just go down to the daily, make sure I'm not seeing anything different here. And it's ironic that you have this huge selling volume here and then it pushed. Almost looks like somebody was position change. Positive here, though, it's confirming on the daily. So I'm going to say, yeah, it probably is going to go back to 388. So how much was that a flip-flop? That's a tough call right there because the MO of the tape clearly likes to flush and give it back. And on the daily, it even looks more bearish to me than it did on the weekly. So, we get below that 278. It's probably going to go back to 230, this 225, this next shelf, because there's really nothing else there. It's going to hold it up. It's not held it. We got a breakout, but we came back and gave it back. So unless there's a catalyst for it to hold it, it's not. All right, let's look at LENZ Therapeutics. It's done nothing wrong here. Trend anchor I would use. I wouldn't enter a position here. I would use my wick off if I don't have a position on it. So 1654 and then 3188. And it probably is an impulse heading to the upside, going out to the weekly. It really has done nothing wrong. What I don't like is you don't have a defined flag. You have 3 peaking drives, 1, 2, 3. So you're going to get a back test. It's probably going to be at least the ABC structure that's going to come in right there. So you're going to get probably something like that is what I would think. At $27, again, I'd like it for re-entry. Sort of my thought. But we do have bullish diversion, but what I don't like is those 3 peaking drives. That tells me it's running out of steam, and because it's cascading as well. So until we break above that 3605, the most likely outcome is that we pull back. All right, METC, rocket ship, second general. If you're holding this, go right to 50% of the candle. As far as your trailing stop, how are you going to anchor that? Use the 636. And this is who? Romanco? What the heck do they do? All right, I'm going to go out and look at the monthly on this one for a second. 3 peaking drives. We're overshooting. RSI is testing. Didn't hold structure. It's breaking out. Maybe we continue. Maybe. So we're trying to keep a piece on here on this. It's noisy. It's more likely an ABC. It's more likely this, like $29, but it could come in and be an impulse leg and we could extend. Let me just bring in the fibs, see what that looks like. See how I use these building blocks to give me conviction on what's there. I use different pieces for different things, tell me different things. So we've closed above the 78.6. So structurally, based on my thesis, Target's 36.38. Hold, set your trailing stop, let it run. I would not add here. All right, I think I went through everything except for TLT. Let me see if I can get that to pull. And if there are any other names that I missed, post them in chat. Now I'm going to come out to a 3-month, which I never do because it gives us a better visual. Powell being fired now opens up the structure for all the Armageddon scenarios in the U.S. financial. So that ABC structure becomes totally viable. We're talking devastation kind of stuff. So it breaks below this 80.37 from trying to see how I want to measure this. Okay, so I'm going to measure this. Really only can measure this last, probably the most accurate leg, what it would look like. And forgive me, I'm going to come in and bring another one in. I want to see what this is. And I'm going to bring in another one here because I want to see what this is. And what I'm basically looking at is I'm looking at the distance of the legs because I want to see where my breakdowns are. So where I have confluence, ultimately, this gives me a quick visual of the different time frames on how to see that. So using my golden box thesis, and that applies regardless of what time frame you're looking at, it might just give you a different target. Close below the 78.6. I'm looking for a 155th. So ultimately what this does, it opens up a target down to 61.37 for TLT. That's bad. On our second fib, we're looking at the 618, so $69 using this flush here. And at least 51 back on that entire leg. It's going to break down to $41. That basically gives you a structure. Okay, so anyone want to look at any other charts? Anything else there? Or did we pretty much cover it? I'm going to my chat window here now because I got lost. Zeta, H-E-L-E, okay, U-M-A-C. Hold on, we're going to get there. U-M-A-C. Come out to a daily and look at that. Flagging. Nice structure. Weekly look like nice look. You bought that at $5. Good shot. All right, let's look at where the fibs are. I like this. Unusual machining. They were in robotic. All right, so target would be your 1844. By the way, when I use the 50 fib, I trade the 50 fib because it gives me a margin of safety. However, when my book is as strong as it's been here and, I continually add book profits and I'm right much more than I'm wrong, obviously I start pushing the limits a little. So the target is off of a fib extension tool from your trough, your peak, and your higher low, right, is the 61.8 is your first target. Your next extension is the 127, and your third extension is the 161.8. However, from a percentage standpoint, the 618 gets filled 78.2% of the time. The 100% fib gets filled 31% of the time. The 618 only gets filled 16% of the time. So your law of averages are much stronger targeting and playing with the 618, just as far as the structure. But as far as your anchors, I would use the body of the lower candle, Actually, that works. Use the 937 and the 445 as far as your anchor. H-E-L-E, Helen of Troy. Hold on a second. Got an alert on the NASDAQ breaking down. It's not done. Not done. Trying to see where. What the heck happened to them? Reversion to the mean. Now, here's where I measure. I'm looking at my mounds, look at my corrective mound. We're extending here. So we had our flat, mound 2, we got this, and we got our 3. We really ended here. This is 1. Okay, we've blown past 2. So it's not an ABC structure. It's an impulse leg. So we should be able to clone this. If it's not going to extend, quite often you get an overshoot and it extends. So an ABC structure, boy, that was a hell of a short. I'm just counting my waves. It's not done. It's going to come down here and do this. And reason being, I'm coming in peaking drive 1, peaking drive 2. You're going to get a peaking drive 3. And the reason is because you got an inversion on your ABC structure. So this is so you got your flushing drive 1, flushing drive 2. So this is a ABC. This is impulsive. So it's going to have those 3 drives, right? But they're not flushing. I mean, you got flushing drives in there, 1, 2, and 3. But the peaking drives are much more aggressive. So you always lean on the more aggressive side. So we're going to get down to about 1301, get a bounce, likely rejects. Where you're wrong is if it closes back above 75.48. That would sort of be my take on it. Nice look. And you want to look at this mound here, from here, Aditi. So you're looking at this 4.122, the distance between that and 7.323. So we're talking 3 months. So structurally, if we draw from here, go out 4 months, right? This probably ends to the downside, maybe later this year, November to December is what it looks like. Looking at the monthly chart here, it's going out a little further in time. Zeta, it stopped. I mean, it really has done nothing wrong. I mean, structurally, it's just in this market, I'm not recommending holding weakness at all, unless underlying relative strength. I think it's just too risky. You know, we alerted here at, what was that, 1471. I mean, we pushed up to 17 bucks. You know, we hit total rejection right here. Once we didn't break above there, it was done. You know, that's just structurally where we were. Lunar, done nothing wrong. Risk 950. You know, you did get stopped if you're using it, which is why it's not on my list to review for today. But again, it's done nothing wrong. Structurally, I've got an alert at, what will that trigger at? 10:07. And I think that's pretty much, did you want me to look at IXH? Well, let me look at it. Nice look. Beautiful divergence. Surely worth a shot until I saw that. I mean, yeah, I'm not going to tell you not to, because it's, you know, structurally, all the components are there. You have your confirming low. You have divergence. All right. Nice wick. Nice seller exhaust right there. So you got this slow bleed afterward. Question is, how long does it continue to bleed before we get a shot back? So I get real interested inside this unbalanced volume above 352. Then you got a shot at a nice move. I don't know what the options look like in that, but definitely has a shot to the upside. All right, folks. Great trading. Until next time.